Well, hey, thank you for joining me today. I appreciate it. How are you doing today?
I'm doing well, Chris. It's a beautiful Sunday where I'm at, so happy to jump on with you this morning and chat about a few things. So thanks for having me.
Absolutely, and I appreciate you carving out time from your weekend to do this. Just to start off, if you don't mind, just kind of give an introduction to yourself and who you are.
Yeah, definitely. So I I've been an investor from about 2018, and I'm mostly an index fund investor, but I like to keep up with market news and everything that's going on and current events and such. So that for me, that's kind of where I line my investing style. But personally, I'm a project manager for an engineering organization, so I use that. Regular work to kind of fund my passions of personal finance and investing. So, I express that through Twitter a lot and connecting with others like yourself. And my name on Twitter is Rawk Finance. That's an old nickname of mine from back in the college days. But yeah, that's really kind of a baseline of what I'm interested, who I am, what I do. Outside of that, my hobbies are baseball, hiking, running, and talking personal finance and investing with others. So that's
Great.
it.
Well, I'm glad you mentioned Twitter. That is how we got introduced, and
Hmm.
I've noticed here over the last several months that you provide a lot of good financial advice through Twitter. I was a little surprised to find that you're not a professional in the finance field; that this is more of a personal hobby or personal interest of yours, which even further increased my interest in learning more about your background and views on finance. I think for most of us, that is the case, right? We all have our careers or jobs in some other
Hmm.
field, but through interacting and exposure to other individuals, we kind of learn best practices and ways of improving our own personal investments. So, I think you've provided a lot of good guidance around that. You mentioned you started your personal investing in 2018. How did you get started? What first sparked you into doing personal investment?
Yeah, so I will say my initial interest of investing didn't start in 2018. Specifically, started a little bit before when I was in college, and I had a professor mention to everyone in class, that everyone needed to, or he would advise everyone to open a Roth IRA. And at that time, I had no idea what that was. And he gave us some references like, oh, you go to vanguard.com and you can open up this type of account, it grows tax free. It's, after it is already taxed, of course, into this account. And I was like, that sounds interesting. So I kind of fumbled through that and I did it. And I was really confused on what it was. So I put a little bit of money here and there, but it wasn't invested in anything. Of course, the old tale that you see so often in the personal finance space, having to invest that money in the account. So, but kind of as that progressed, I kind of held on to that account, and I was like, am I doing it right? So I started looking up resources of like, how to use the website, the Vanguard website, which if you don't know, it's gotten a little bit better, but it was pretty bad back then, user friendly wise. But I slowly kind of just started stumbling on things that you know, should know about what to invest in. And that kind of led me to where I started investing in single stocks. I didn't really have any idea what they were about, trying to read balance sheets and, all that kind of stuff, to where it was like, I started to learn more towards index funds. And I think about the time we got to towards the end of 2018, I started investing, realizing I need to have it invested in a more long-term fund, and thinking there. So that's when I kind of moved some money around and put it in there. And kind of one thing led to another. From there, I created my own taxable account. I was able to kind of reframe my 401k because I didn't know what it was doing prior to that. I think a lot of people don't realize that, but that was kind of where it started. And I've kind of just built on that from then until now. So that's kind of the origins of how that came to be.
Good. Now, with either your Roth or your 401k, are you actually directing what the investments are in those funds, or are you leaving it up to a financial advisor to do that, or how do you manage that?
Yeah, I'm self directing. there's from a Roth IRA, you usually have more options, but a 401k, it really depends on the employer sometimes. But I have some pretty good options there. Like total world funds, S&P 500 funds that I use that are kind of a one-stop shop for me personally. So that's what I use. And I guess that's technically self-directed. It doesn't feel so self-directed for me, but, I was like, okay, this is what I need. I don't need, these other funds, high fees on them. I need low cost index funds, those accounts are meant to be, I'm meant to be accumulating them for, 20 to 30 years more. So I'm not too concerned about, the target funds and making sure I have all these other types of exposures and people moving around for me. So that's kind of my lay on that, which is, I guess, technically self-directed, but it feels a lot more passive than myself doing it. But
sure. So I know historically a lot of the advice that's given around 401ks, people that have an employer that's doing a 401k and somebody that has Roths, is that the guidance is usually to max out your investment in the 401k, from a match standpoint, get the full match. And then in any excess funds from there, invest in a Roth. And then once you've been maxed out your Roth, then go back and max out your 401k. Is that guidance that you're typically aligned with as well, or any thoughts on that?
Yeah, I would say I'm pretty well aligned to it, and I do deviate from time to time. I think that's a good kind of way to manage, especially if you're kind of starting out, you're creating those accounts, or if you have a 401k, then you want to create a Roth, and you're like, well, I want to create a taxable account as well. That's a good kind of way to go about that at the start. But I think goals definitely change, as depending on the person, your age, what you want out of life. So I generally follow that rule, but there's times where I am, sending more firepower, I guess if you can call it, to the taxable account versus others. Because, I always make sure to meet my match in the 401k, but I'm not, for me personally, I'm not going to max it out. I think it's like 19. I think they just raised the contribution limit per year. It was like 19. Now I think it's 20 or 21. But, I'm not focused on doing that. And I'm a little bit more focused on my taxable account now versus the others. But that's historically how I've approached it. And anybody starting out or just generalizing, I think that's a great way to approach it until you maybe kind of find your rhythm or start thinking about other goals you might have. But generally, yes, I'm aligned with those for sure.
And when you say taxable account, you're talking about funds that you're putting in after taxes, that the growth of that money or returns from that money is also taxable. Is that right?
Yes, it's taxable, but it's not in a retirement account. So there's, of course, the restriction with the 401k and the Roth, although the Roth has a little bit more leniency. But there's contribution limits to both of those, whereas the taxable, if you can, if you have the means, there is no limit to what you can put in per year. You can put as much as you can or want. There's no restrictions as far as taking money out. So, and the FIRE community is huge. The financial independence, retire early movement is kind of more widespread than it is or was like niche before. But if you're someone that wants to try to retire early before traditional retirement age, you want to have access to money prior to traditional retirement age at 59 and a half. So, that money is taxed going into a taxable account, and it's tax coming out, of course, at the capital gains rate, depending on if it's short-term or long-term. So those are can be utilized for different goals before traditional retirement. So,
sure. So I'm kind of curious, over the years now that you've been doing your own investing, what's the biggest thing that you've learned, or your biggest piece of advice that you could give someone?
Yeah, it's I think at first it is pretty scary when you think about investing. You start putting in money. I think, just think back from when I started, you want to make sure you understand what you're investing in. If you're not, if you're confused on what it is, what it does, what the company is, or what the fund is about, you obviously want to learn that before you do. But I think it's a good idea, especially somebody that's brand new and trying to figure out what's going on, is to start slow and scale up into the sense of where you're not, putting off investing, but maybe you're starting with a little bit smaller amounts at first, let's say in like a a total US market fund or total world fund or S&P fund. And then as your confidence grows, you start to scale a little bit more because, the market movements are a little scary at times. If you're not used to them, you're not, a lot of people preach, market. I won't say a lot of people, but depending on who you're following, you might see people kind of speculate that market always goes up, but it obviously doesn't. It ebbs and flows. It goes up over time, but generally speaking, or historically speaking, but I would say start slow and scale into what you understand. And as you start to learn more, then you can kind of move to other stuff. But that's a good way to go. And also just, be careful what's out there, fact check things, a lot of people put a lot of good information out there, but there is some information that, is very personal, or people are biased towards one thing. So as you're learning, anybody that's starting out, just see what some people say. Maybe you're on Instagram or Twitter or wherever you are, TikTok, see what they're saying, but then go research that first and understand the pros and the cons. So that's what I would say.
So if I'm somebody who started investing in 2021, putting money into the stock market, whether it's, index funds or something of that sort, and having seen the bloodbath that 2022 may have done.
Oh, yeah.
That, what kind of advice would you give to me, as we enter 2023?
Yeah, I mean, I think it's a really interesting time now because it's, 2022 was rough, and then 2023 started out, a little bit better, market wise, but there's still so much, stuff out there. People are still calling for recession, and, a lot of geopolitical issues and economic risks and all that kind of stuff, which is important. But if you're investing for the long term, it's kind of just noise. I think as we're looking into 2022 and 2023, I think you just have to make sure that you're aligned, that your investing strategy and goals are aligned. So the worst part is, and I've been there before myself, is when you're investing in something and the movements start going crazy. We think about 2020 and huge market dips, when COVID first hit. And then, of course, stimulus and inflation. And, then you have 2021 into 2022, anything you buy is going up pretty much. And then 2022, you start to see the money being sucked out of the market, and you're like, oh my gosh, So I think as we move into 2023 and beyond, just make sure you're invested for the long term, for something that meets your goals and that you understand. But I think it's important to kind of realize that I think both, like a bull or a bear scenario, I think a lot of times are overshot in both directions. So just maintain level expectations and look for the longer term versus, next month, this year. So
certainly. Well, and I think a lot of people, who do investing for a living, would probably view it as, yes, the markets came down quite a bit in 2022, but that means the investments that you're buying today are much cheaper, and therefore you can buy more of them going forward.
Yeah.
And probably in 10 or 20 years from now, we'll look back on this as nothing more than a blip in the overall, growth of asset prices.
Exactly.
Hopefully.
You'll see a little tiny little line that in whoever's posted on Twitter or whatever social platform we're using, then it'll just look like a little tiny blip on a chart going up. Hopefully, you know what I mean? But yeah, definitely. So
good. So, I know you're not an economist, but let me kind of put you on the spot here a little bit. What would you say are some of the biggest economic headwinds that the market is facing, as we move into 2023?
Yeah, I think, of course, it's tough to say. Rates are definitely one, right? And inflation. I think those are the biggest storylines from 2022, and they'll still be, the biggest storylines this year and, maybe going forward after this. But, the last CPI report, although it was lower than the year or month prior, right? It has a lot of people worried that there's more persistent inflation than maybe some people expected. So I think the biggest headlines are still going to be, is the Fed raising rates? Are they holding steady? Are they going to cut rates, or versus how inflation, is it decreasing but not decreasing like we thought? Is it going to be persistent? So those, the rates, rising rates have a direct correlation with, right, money in the economy flowing through the economy. Lower rates, more money flowing through; higher rates, less money flowing through. So I think those will continue to be the biggest headlines still. Any other geopolitical things that arise that can hurt, markets. But I think the Fed kind of driving that direction. That's where the narrative, I think, for a lot of news and headlines will be coming from. So if there's going to be recession, you should always be prepared, right? Make sure you have an emergency fund and you're seeking other potentially other income sources, bolstering your skills. Always have a contingency plan. But if the Fed keeps raising rates, that's just less money flowing through the economy. So I don't know what that will mean, but I think that will be the biggest story still this year.
For sure. So I know that previously you had mentioned to me that you guys may be moving, and of course at that point in time, looking for new housing. I know you own your home today. With interest rates, mortgage rates having gone up so much over the last year, is that going to have any effect on you? When you move, will that alter your decision making at all as you start thinking about what you're going to do for housing, in your new location?
Yeah, it is really probably the main decision point for us, trying to figure out if we should rent or buy in our new location. We are taking steps to get our home prepared to be rented out in the next few months. So we're excited and kind of nervous about that opportunity. But where we go next is a higher cost of living area than we are now. So we're trying to figure out, home prices have decreased in some areas, but they're still, with rising rates, they're still maybe even more expensive than they were. You think about it from a monthly payment perspective. And that's the case for a lot of big metro areas still in the United States. So, ideally, hope if rates continue to rise, hopefully that puts, just for our particular situation, we don't want to lose our homes, but if, that could put more downward pressure on home prices. So if that's the case, maybe we look to buy. If not, we'll try to look to rent, but rents at the same time have gone astronomical too. So those are two big unknowns for us. So we're really going to have to see how that shakes out. But that really is the biggest, unknown and driver in our decision making. So we still have some time. We'll be moving in the summer, so a lot can change in that time frame. But we will see, definitely. So
it will have an impact on your decision making, it sounds like.
Oh yes, 100%.
So, when you look at how inflation affects the consumer, a lot of other areas have been affected by higher prices, food items, clothing. We luckily, I think we're on the back end of this now, but for a while there, things like lumber and other items from home improvement stores had gone up significantly. Has the rise in prices altered your behavior at all over the last year, or have you found yourself able to absorb it? And how do you think that consumer spending is remaining so high even as prices have gone up so much?
Yeah, and that's a good question. It doesn't seem to be, if, like you say, consumer spending is still up, but inflation is, it's coming down. So I think in some areas it's easing, but there's some areas that are a lot more persistence, right? If you looked at eggs, I think the prices started to come down, but eggs were up significantly the last couple of months. So just little things like that. I think the spending tells a different story maybe than how other people are perceiving it in, news and headlines and things like that. I think for us, we've definitely felt an increase in prices. And, if you look at gas has come down from its peak, but, things are still higher than they were, a year or two ago. So that has altered our spending a little bit. We have room in our budget to absorb some of those costs, but that means a little bit less for what, we're saving and investing, but we built a pretty good system and we're fairly frugal. We don't buy a lot of things that we don't need. But we're not afraid to spend on stuff that we know that we do need and stuff that we want to do. So it has affected us, but hopefully, like you said, we're kind of on the tail end of that, where things will kind of, continually decrease like we have been. And hopefully the consumer is going to be in a better place by the end of this year. So
hopefully. You mentioned energy prices, and I know that you don't currently own an EV, neither do I. But would energy prices at any point in time, if they shot up to a certain point, would that motivate you to go to an EV, or if not, what are the main decision points that you would look at before considering replacing? I know you have a very economical vehicle that you own today, but is there
Mhm.
anything besides energy prices that would spark you to make a change, trade it in for an EV? Or would it be dependent on energy prices?
It would definitely be a factor. A lot of things with energy prices. I don't thinking of my current state right now. I don't. I think a lot would have to happen for us to be like, oh, you know what, we need a Tesla or something else like that, an electric vehicle. Energy prices would have to skyrocket. There would have to be a little bit more widespread, more affordable, electric vehicles. I think Tesla has always kind of been like the pinnacle. But other competitors are coming out with electric vehicles that are a little bit more affordable, and I think that the marketplace will get more competitive the next few years, and there's a huge push, of course, for EVs and those kinds of things. So I think for us to seriously consider changing one, our car someone have to happen to our car because we like it and it's economical. It's about to be paid off, so we plan on keeping it for a while. I know the charging, right? That's a big component for EVs. That I would say those need to be more widespread. I would hate to have to go to a charging station somewhere, leave it for a few hours. I'd want to charge it in my home, but then what does that look like for energy prices? And in my home, I'm not sure. I'm sure we could find some research on that with somebody that owns a Tesla or something. But those are things that would have to happen before we considered it. I think I would want the marketplace as well to be more competitive in offerings before we went to an EV for own personal use. So
Makes sense. Yeah, you kind of get attached to a certain type of brand or a certain type of model of
yeah,
car, and until that vehicle is available as an EV option, it makes it harder to start considering other options.
that's definitely true. We drive a Honda CRV. We like it. It's economical. It's big enough. We can travel with stuff. We can pack stuff. We can do whatever. So it would I don't know if Honda has any EVs today, but it would.
Hmm.
If they came out with one, maybe I would be tempted to look at it and say, okay, maybe. But until that moment, I think we're pretty steadfast. But that's where the future is trending. So I foresee us in the future probably having an EV in one point in time. So
Yeah, I think we're in the exact same boat. We're on our third generation of a Toyota RAV4. It's been a great vehicle for us for many
mm-hmm.
years. And, if the RAV4 comes out in an electric version, I'm sure we would consider it. But at this point in time, not necessarily any burning reason for us to trade that in for an EV. So you
Definitely.
mentioned earlier you're thinking about renting your home out, renting your current house out.
Mm-hmm.
Tell me a little bit about what kind of research you've done to prepare yourself for that. How are you getting ready to become a landlord?
Well, we're just researching, typing and stuff on Google and looking for resources and just general ways that we should frame our thinking towards it. There's a lot of resources in influencers on social media that give you information, but you, like I said, always need to retain information, but verify and see, what works for you. What we're doing now with our home is we're looking in the local area, what other homes that are similar size, similar area, neighborhood are renting for. And seeing maybe how we could increase the value to a renter by updating some of the stuff in the home, maintaining the yard, what we could add, what we could take away. We're actually going to be meeting with a realtor that can give us some pointers on what they think the market looks like in our local area and what we need to do from a safety perspective and from just an upkeep and maybe upgrade perspective as well. So that's kind of where we are, but we want to make sure the numbers work before we actually do it. So I think we're want to talk to a local expert to kind of see where we are, and as long as the numbers make sense, hopefully there's a lot of unknowns, but we're gonna push forward with it. So very beginning, I would say, of the process for us.
Good. Well, I wish you luck with that. I think that, real estate investment is a great way to, build wealth. It's certainly one of the many tools that are out there for building your own
Hmm.
personal wealth. So I think it's great that you guys are looking at it, and I wish you luck with that.
Thank
So,
you.
looking down the road in 2023, are there is there anything that you think the government, either at a federal level or the state level, could do to help smooth the road, for the economy to grow? Or really is there not much, that they can do at this point in time? Any thoughts on that?
Um, that's a good question. I want to preface it by saying I'm obviously not an expert in that field, and I don't consider myself super knowledgeable on government and economic policy. But I know there's been a lot of initiatives and more focus on like moving jobs back to America. Like chips. I think the Chips Act, right, is trying to push money back into the states to produce chips. Right, chips are pretty much used in. I mean,
Everything.
yeah, almost everything today.
Cars,
So
computers, yeah.
yeah, exactly. So, I think, the government subsidy of that industry, could be huge, and EV as well. I think whether, like I said, I don't want to get into the topic of, gas versus EV because that's gets people pretty contentious, but that's the way that I think people are, the industry is trending. So those kinds of things can help continued growth, I think, for the United States. We look in 2023 and out as growth opportunities. But as far as, just the kind of current state that we're in, I consider myself a optimistic person versus, pessimistic more oftentimes. So I'm hopeful that the steps that they're taking, hopefully will help us. But with our current environment, but ultimately, I'm not counting on that. So I'm taking steps to make sure that we're planning for the future. We can, worst case scenario, we can support ourselves, hopefully. So those are things that I hope, can see us, the United States kind of going towards, which, like I said, helps growth and maybe economic strength, but trying times right now for sure. So.
So, again, going back to personal investing, since you are on Twitter and you see a lot of, what's posted and shared on social media and so forth, what would you say is the biggest mistake that you see a lot of new investors or even experienced investors make?
Yeah. And I probably, I make plenty of mistakes too. I think the biggest thing that for my own personal style, I like to keep it simple. We've talked about index funds and ETFs are my style, is like when I'm thinking about changing it up or like I want to do something else, I'm like, that's just more complicated for me. I think a lot of people are posting good information, but it's coming from a point of bias a little bit because it's, maybe it's what they're interested in or what benefits them. But the herd mentality, I think, is pretty powerful, depending on what you're looking at. If you were on Twitter, before 2022, there was a lot of hype with growth and cryptos, and then a lot, then moved to more consumer type stocks, dividend stocks, which are all great investments across the board. Maybe not cryptocurrency, depending on where you are, but they all have a place. But you can kind of see how sentiment shifts where everyone's focusing on one, then it goes to the other. So I would say, just kind of check yourself, take a step back sometimes, and make sure whatever you're doing is aligned with your goal and not just because you see a lot of people posting about it. So those are definite and things that I fall for too. I bought a couple things that a month later I was like, why did I buy that? And I was like, I think I just saw a lot of people tweet about it a bunch, and it was like, it doesn't really fit me. Not something that couldn't fit me in the future, but something that I was like, this just doesn't make sense for me right now. So then I got out of it. But those are the things I would say to watch out for sure.
Great. Well, Rawk, thank you again for spending the time with me today and providing all this great insight. I look forward to continuing to follow you on Twitter. I think again that you're providing lots of great tips for people, even as they look at their personal investment. So I encourage you to keep up with it. And thank you very much for your time today.
Yeah, thanks, Chris. I appreciate it. I love the chat, and I look forward to connecting with you further. So
sounds great. Thank you.
Thank you.